right. Okay. You will be asked a small section for accounting, okay? Because it is part of chapter 1. Now, again, I've mentioned this many times and many times before. QuickBooks is not you don't need to have accounting background in order for you to use QuickBooks, okay? But for avid users of QuickBooks, at least getting the basic information or from accounting allows you to have more knowledge on how QuickBooks works, especially when you need to modify the accounting behind the scenes. If you can understand how a debit and credit works, then you don't technically have to use QuickBooks. You could just do manual bookkeeping in this sense. But the purpose here is so that you can have a little better understanding, because understanding how debits and works allows you to understand how a transaction works. Now, again, once again, you are not obligated, especially if you are working for a company, because they're most likely going to say, hey, you're going to be in charge of this, and this is how you do it. Boom, boom, and boom. And if you have any questions, ask the accountant. So in this case, you're like I mentioned before, you're not obligated to have the accounting background. So it just helps you be able to manipulate QuickBooks in a way that works best for you. Okay. Especially when if you're planning to use QuickBooks to run your own business, it is very key that you have the basics accounting, because that it's the backbone of a business anyways. But if you're not in the accounting field, right, it only helps you benefit yourself in case you do make a mistake, you're able to fix it. Okay. However, it is going to be a big chunk of your exam, right? It's about 10% of your exam, so approximately 5 questions. Okay, so a student should know, okay, what the basic financial statements are and have a basic understanding of what they are, okay? So let's list them out. What are the 3 financial statements that you need to know?
The asset, liability, and equity.
Okay, so what do we call that one?
The detail of financial outcome.
Okay, so you're in the right area. Okay, so there's an actual financial statement that uses those 3 things, and that's called the balance sheet. Okay?
Double entry accounting?
Not double entry accounting. That is a systematic way of how you enter in a transaction. So we talked about this in chapter 6. It is the top 3 that you are required, whether you're the accountant that has to run these reports every single end of the period. Okay? It doesn't depend on what position you are. It's a general one that you're supposed to produce at the end of every given period. It's a accounting type of report.
Profit, loss,
Yes,
general ledger?
not the general ledger.
Statement of owner's equity?
Not in this case, we do not have that. It's combined with the balance sheet.
Oh,
Profit, loss, and class report?
Not class report. Okay. So if I go to reports and I go to, I think it's company and financials. Oops, company and financials. What do you see?
statement of cash flows.
Yes, statement of cash flow. So in accounting, there are 4 basic, the 4 basic financial statements that you must produce at the end of every given period. That is the profit and loss, also known as the income statement. But in QuickBooks, you need to know it as profit and loss. We have the statement of owner's equity, which actually that's combined together with the balance sheet, because the balance sheet is tests to see if your total assets equals your liabilities and your equity. Okay? And last but not least, the statement of cash flows. This one determines to you how much money actually is flowing into your company and how much money is actually flowing out from the company. So you need to know a basic understanding of what each one does and what the purpose of it for is. So profit and loss, it's pretty straightforward, right? It's meant to measure profitability. Okay, right? When you want to test to see if your company is doing well, if you get a net profit, then that means you are doing well. That means that all your expenses are less than all the income that you generate. But if you take a loss, which most companies can take a loss, especially those that are like a grocery store, because they contain so much food, and you know so much food can go to waste very easily, especially all the perishable goods. Those ones are more likely to have less of a profit. Right? So the balance sheet, once again, tests the accounting equation. Okay? Which tests if all of your assets equals your liabilities plus your equity. So if you guys remember, your assets are everything that you own. Your liabilities are everything that you owe to other people. And equity is going to be the value of your company. Okay. And then last but not least, statement of cash flows, right? We briefly talked about this. It's not as important unless you choose to select it, but it literally tells you how much cash flows into your company and how cash flowing out of your company. So once again, especially when you're dealing with a accrual type basis of accounting, right? It's gonna give you an outlook of how much of those sales are you actually collecting, how much of it is actual income that you've actually earned and it's in your hands right now versus all the people who owe you the money that it's basically invisible money. You may have sold the product, but you never received the cash. So therefore, that's what this whole idea of computing the statement of cash flows does. It shows you how much money you actually earned versus the accrual type of accounting. Okay. All right. What's the difference between the cash and accrual reports?
Well, the cash is the right of the transaction.
Okay, essentially both of them will encounter cash, but yes, it is definitely part of the transaction, but there's a key difference between them.
One recognizes revenues and the other don't.
Okay, so they both recognize revenue. But what's
Different times.
at different times? What do you mean by that?
So
Apples So on a cash basis, it's going to be, I mean, pretty much immediately either when the cash is paid or spent.
Good.
And then the accrual is going to be when the liabilities are accrued or the assets are purchased but not necessarily received, or the cash hasn't actually gone out yet.
Good. So cash basis, right?
So dealing with, like receivables or payables.
Correct. Okay. So cash basis, we understand that the idea of running a report that's cash basis is that you're actually seeing your true amount of cash that's being truly recorded. So all income and expenses are recorded when cash is received or spent. Okay? So therefore, recognizing the actual income that you've actually earned. Whereas an accrual basis, right? Income is recognized even if cash has been paid or not. Right? And expenses are recorded when incurred rather than based whether you whether you paid or not. Okay, so the idea here is using accounts receivable and accounts payable. You did not actually receive the money, right? But you still sold the item. So under an accrual basis, right, you're reflecting theoretical money, right? You're saying that I made a sale, but you really didn't because you never received the money, okay? And running the difference between these two reports is that one of them is a theoretical profitability, right? You're saying that, you made all these sales, you've earned all this money, but in reality, you didn't receive all that money because people owe you that money. Okay, and there's a huge potential that that those accounts can be at risk because you can't trust all your customers. You can't expect every single one of them to pay you 100%. So here you're basically creating not imaginary, but potentially you're doing a theoretical saying, look at me, I earned all this money, I am this profitable, right? But if you switch to a cash basis, right, it's going to take out all the sales that you did not receive cash for. And it's going to tell you how much your company truly reflects, especially when you're dealing with actual cash flowing into the company, right? And if you see on a cash basis, it shows you your true profitability because we understand that cash is very important for all transactions, right? We understand that you need to have cash in order for you to operate. And if you are allowing everybody to owe you on credit, right? How are you going to be able to pay all your expenses? You can't because you're not getting any money. So the idea here is making a general conclusion from an accrual basis to a cash basis is to show you, right? Each report. So whether it's your sales, whether it's your expenses reports, or whether it's anything other than that, you can tell from an accrual basis, like, okay, you all these people owe me money, therefore I'm not very profitable because I never received the money. I sold my items free, basically. Whereas my cash basis will not recognize that. It will not recognize that I sold anything until I receive cash. All right. So that's the definition between the two, but as an example to use for reports, for example, profitability, right? You may say you're a very profitable company, but it's not true because you have so many people that owe you money. Whereas your cash basis is going to show you a true profitability because when you actually sold your items, you actually received cash for it, right? So that's the difference between the two. Okay. All right. How and why to set a closing date. Okay, let's talk about how, and then we'll talk about the why. So how do you set a closing date?
Go to company
Company, where?
on the menu bar,
Company on the menu bar.
and set closing date is right there.
Perfect. Good. Okay, another way that you can do that is through your edit preferences, because if you go through here,
Okay.
okay, and you set your closing date, right? Let me there. It's gonna take you exactly to the company preferences window.
Yeah.
Okay, so that's the two ways that you can set your closing date. Okay. So let me go ahead and record that. Okay. How you could do company menu. Or edit menu bar preferences. And I think it is at the, let's see what it, accounting. Yes. Okay. So, what's so important about setting the closing date? Why do you need to set a closing date?
To lock the transactions.
Yes, to lock transactions. Now, why would you need to lock your transactions?
So nobody be able to get in there and change things or have any access to it.
Perfect. Okay, to lock transactions to prevent any user to have access to change or manipulate late old transactions. Okay, good, excellent. Okay, last but not least for this section says how to enter a journal entry if asked to do so. Okay, so we talked about this in chapter 12 and chapter 13. How do you enter in a general journal?
The menu bar under company.
Company menu bar.
Yep. And then make general journal entries.
Perfect. Oop, let me close out of this. Okay. Yep. Company menu bar, make general journal entries. Good. Okay, so company menu bar, make journal entries. What's so important about using a general journal entry? What can you do? What can you use a general journal entry for? Primarily in QuickBooks. What do you use a general journal for?
To separate To keep the recordings separated.
Okay, how so?
Uh, like when you when you have your company, you make your journal just to so you can keep records of all your transactions without affecting the other ones.
Okay,
Your
okay.
banking, your banking or your purchases or stuff like that.
Oh, okay. Now, QuickBooks does most of the accounting behind the scenes, so it does all the general journal work for you. So it runs all the debits and credits behind the scenes. So what do you as an accountant need to use the general journal for if QuickBooks does majority of those transactions for you?
To balance adjustment.
What was that?
We are using journal to balance. We want to balance the accounts or make any adjustment.
Good, good. You use it to make adjustments. Good. Okay. For end of the period, end of the accounting period, or year to end transactions. What else? This is in chapter 13. What else do you need to use a general journal for?
It says to track the details of your expenses.
Um,
Um, $0 check.
okay, so a $0 check does for items, but you're getting in the general area. What do you normally use it for? They have bullet points. It's to um, edit.
It says you can use the journal entries bank accounts so you do not clutter the normal bank accounts with $0 checks.
Okay.
This transaction.
Okay. So when we do that, right, that's just a recommendation because they want you to use that. So then, yeah, like you've mentioned before, so you don't clutter your actual checking account because in this case, it has no dollar value at all. Every transaction that you do, there's no real money going through. So what you ideally would use it for is for any adjustments, for any reason that you need to edit or recategorize. Let's say you made a mistake and um, you placed an account where it shouldn't be. You can fix it by recategorizing it. Okay. Another one too that you can do too is so we have adjustments. Okay, recategorizing. Um, you could use it for fixing mistakes. And the one that you're supposed to know here is that you can use it for open balances too. Opening balances. So in chapter 12, right, we talked about how you would set up your company file, right? In order to, if you are in a pre-existing company file, you would use a general journal entry to enter in all your opening balances. Okay.
Okay.
So that's just, I just want to make sure you guys know why you're doing a journal and it's not because you can enter your transactions. Yes, you could do it manually, but then that defeats the whole purpose of using QuickBooks. Okay? Because QuickBooks can do majority of the accounting behind the scenes. Now this one requires you to have a real good knowledge of debits and credits in order for you to be for you to truly understand how a transaction works. Okay. You should know what the accounting equation is, so I don't know why it's not in here. You should definitely know what the accounting equation is and rules for you know, like the rules for journalizing, right? So here I'll just go ahead and put it under the journal anyways. So what's the rule here? Your debits must match your credits. So debits equal credits. Okay, so in this case, every transaction that you deal with, so this is the double entry system, right? Is that if you are using a journal, your debits must match your credits. Okay, it will not let you enter in a transaction unless you have an even amount transferred into these specific accounts. Now, you want to also know that this is also the backbone of accounting itself, is knowing that if one transaction, one direction, so let's say I had a sale, right? Therefore, I have a bunch of credits because I sold something. But what's my counterpart? I must have received cash at some given point in time. Either I sold it for cash or I had someone owe me money. So therefore, that's the counterpart, is that you'll have your equal debit, right? You're going to get paid for whatever you sold for, okay? So that's your equal debit and credit. So you need to understand that debits must equal credit. So it's something that you need to know, okay? All right, last section here is customization, okay? Or saving time and stuff like that. Okay, so the purpose of having QuickBooks, right? Hence the word QuickBooks allows you to save an extremely amount of time for every transaction that you do. So if you notice that every single time you enter something in here, if you entered it in once, QuickBooks will recognize it. So every time I enter in a bill, right? If I type in a supply, right? It should populate for you. This is the fill in tool, the fill in handle. So it allows you to type in stuff and be able to fill things on a lot quicker, right? And if I were to select, either I tab it or I select a supply, it automates and fills all the information for me. So it makes it essentially, it saves you a lot of time to have to enter in the address over and over again. It will automatically populate it for you. But before you can be able to do that, you need to set it up in their appropriate section. So this was a vendor, right? I set this up in my vendors, so that's why every time I use this person's name, right? If I use a supply, it will populate all the information for me. And guess what? I have this as a memorized transaction. So it's telling me that I am going to buy office supplies from a supply. Okay. So once again, the more you fill in information into QuickBooks, the more it can make connections, and it will help you do your bookkeeping a lot quicker by saving you extra time. By entering into this, it will enter in a PO number for you, especially if you set a specific what do you call it, series. So for example, the checks, right? If I type in 331, the next check I write is going to be 322. The next check I write is going to be 333. It's going to automatically keep track of that for you. So the only thing that you have to toggle is the dates, maybe some information, right? But again, we type in an item, right? Let's say I want the photo paper. Okay, I guess it's not in here. So let me see what other items I can. Okay, so it's not. There you go. Items. 5x7. See, I can do a 5x7 frame. It will automatically fill in all the information for you. tell me that this is what it costs me and this is how much I have to pay, right? All I have to do is toggle how many items I purchased. So everything that you do in QuickBooks makes it a lot more easier and quicker to fill in the information, and it makes it that much easier to do your bookkeeping. Okay? So here, let's go ahead and answer the questions. So first one's first is how and why to memorize transactions. So we talked about this on Monday in chapter 13. Let's talk about the how first, and then we'll talk about the why. Okay, so first, how do we memorize a transaction? So whether it's you're memorizing a bill or you're memorizing a sales form or a purchase order, how do we memorize it?
You get a company and the menu bar?
Company on the menu bar? I don't think so.
No. And it's right there on your bill.
Mm-hmm.
There is the button right there for memorize if you want to memorize this transaction.
Good. So you need to create the form first, or whatever it is, create the transaction. Okay, first. And then at the top of the window, you will see memorize. Okay. Now, when you do that, you're going to get some criteria on how often do you want it to memorize this bill. Would you like to set it as a reminder? Would you like to automate it? Etc., etc. Okay. Now, why is it so important to memorize transactions? What's so important about memorized transactions? What does memorizing the transaction do?
Recategorize. Oh, that's a big word.
No,
Transaction.
not recategorize.
Class. That's it.
No, that's not it.
I mean, no, yeah. The word I was meaning.
In this case, to memorize a transaction does not do that. So that part is from the previous question. Why do we use a general journal for? Is to recategorize your accounts.
So that you don't have to do it again.
Yes. So you do not have to do it again. Good. So the purpose of making this bill, okay, and you memorize it, right? Especially for reoccurring bills. Let's say I have rent, right? I know that every month rent is due on the 5th and it's the same exact amount every single time. So if I know that one thing, then that means I can expect a bill to pop up and say, hey, you have a bill. It's due on this date. You received it here. Here's the information. All you have to do is change is the billing information, right? Because every bill is going to have a different number on it. So in this case, we did an example of the insurance because you have to pay every month. So, and yes, so it is to help you so that you don't have to create an exact one every single time. So why? So you do not have to make another bill slash sales slash transaction. Okay. For reoccurring transactions. So once again, or Okay, so once again, when you see a bill that's reoccurring, or you don't have to re-enter it every single time, brand new, by automating the or memorizing the transaction, what you're essentially doing is just you're saving more time, because all you had to do is just click on the memorize transaction. So let's talk about the how once again. So, or in this case, where would you be able to find it? Where would you be able to find your memorized reports? Or I'm sorry, yeah, memorized transactions. Okay, so in this case, right? The why is because so then we don't ever have to enter it in again, right? It's the same exact bill with the same exact information. I can just click on the memorized transactions and it be able to produce the bill for me. I don't have to do anything. I don't have to fill anything out except for the date. In this case, with the automated ones, you don't need to fill in the date either. You just need to fill in the billing information and that's it. Okay. So where can I find these memorized transactions?
It's right on top of the, where you create a copy, is gonna be for your bills or your,
Oh no, let's say I memorized this bill already. Let's say I'll do it right now. I'll say that I bought 10 of these, okay? And I'm gonna memorize this bill right now. Okay, memorize. All right, and it gives me this. I'm gonna say, order frames. All right, I'm gonna have it automated. How many times do I want to be reminded? Never, because, well, actually, let's say I have to buy it every week. 10 items every week, and I'm going to say my start date, or my next date, I'm going to say is, let's say I have to buy it, well, I'm in 2017, sorry. Let's say I have to buy it on the 15th of January, okay? And it's going to recur every week, and I'm going to click OK. Right? So now that I memorized this, so the next time I open up this bill, it's going to populate the next week, and it's going to show me the exact same order, okay? So where do I find this? After I memorized it, where do I find it? How can I recreate this transaction? Okay. Where would I be able to find my list of memorized transactions?
On the bill tracker.
Bill tracker, no. You wouldn't be able to find it. You have to
From the report center.
not report center.
go to
This
list and the menu bar.
list.
Memorize transaction list right there.
Excellent. Memorize transaction. So if I look at this, here it is. There's my next bill. If I double click on it, or sorry. Okay, yes. Okay, it will populate the brand new one for the next week, right? The 15th, and it's telling me all this information. It already filled it out for me. All I have to do is say yes. Okay, or let me write my bill information. So let's say it's 224, and I go save and close. Yes. Right? And if I do it again, yes. Here we go. The next week is the 22nd. Filled in all my information. Everything looks good, except now I'm going to say this is 2341. Save and close. Yes. Okay. And then if I do it again, okay, it'll populate now the week after, which is the 29th. So again, everything fills in automatically for you. Okay.
The reference number.
Except for, yeah, because all bills are going to have some different yes.
Yes.
Okay. But here it is. That's how you memorize the report. It saves you a bunch of time because therefore you don't need to do anything here. You can make some changes. That's completely okay, but it will let you know, hey, if you're gonna make changes now, do you want to resave it? Okay, so that is how you use memorize reports. Okay, where is going to be lists
in the menu.
on the menu bar and memorized transactions. Okay, good. All right, this question says how to set up multiple users and what level of accounts or sorry access can be granted. So we did take a look at this. We did take a look at this in, I believe, chapter 12. Okay. So the very, very beginning of class. Let's talk about, well, there's only one question. So how? How do you set up a user?
Under company on the menu bar?
Company menu bar. Excellent. So company menu bar. And then you're going to have set up users and passwords. Okay. So once again, we took a look at this. So I want you, if you don't remember, go ahead and read it in chapter 12. But yeah, so if you go to company and you say, I want to set up some users and passwords, you can actually set up, so I'm going to say set up users. You can set up any type of user. So if you're a corporation, right, you have many positions. But let's say you're a small company and you want to have some people be able to access the file. You could create users for them, right? Maybe they're the accountant. Maybe they're the HR. Maybe they're the sales representative. Okay. Maybe they're the inventory manager. You can create it, and when you go through the how much access they have, right? So every time that user decides to use the QuickBooks, it can only show them the exact part that they want to look at. So for example, right, HR can only look at checking and look at the employees section only. They don't need to take a look at the vendors or inventory or the sales process. They only need to focus on just that small section in QuickBooks. So yes, all right. So good. That's how you set them up. Okay. By going through the company file and setting up users and passwords. Okay. Next question says how and why to create custom fields. Okay. So, okay. We talked about how. Let's go ahead and talk about how and why. Let's talk about the why first, and then we'll talk about what how after. So why do we need to create custom fields? What's so important about custom fields?
If you need to put in some piece of information that isn't standard.
Okay, good. Okay,
We talked about what, like pet names or
good.
is that a different? Yeah.
Nope, that's it. That's
Those custom
correct.
fields, yeah.
Okay, so why? To create extra fields that are not standard.
When you set a new customer, vendor, employee record, you can define custom fields for tracking additional information specific to your customers, vendors, or employees.
Good. So good.
Second, the their preferences?
You could do that too. Yes. Um,
Like if you have a vendor that comes all the time, a customer that comes all the time, you want to be polite and be able to know what he likes, or uh, like you said, the pet's name, or just have that for a background, so you when you talk to them, you know actually how to treat them.
Exactly. It's a relationship builder. So, for a good example, customer, right? If they tell you that they have a wife named Linda or something, right? You could always say, "Hey, how are you doing? How's your wife, Linda?" That customer will feel more, exactly. They would want to open up and then build a stronger bond with you. But obviously, right, as a business owner, you also want to be able to um, have those relationships with your customers, because then they're more likely to want to support you, or they want to, buy more products from you. So, as a customer standpoint, right, if you can build a relationship by knowing these extra information, additional information, it just makes your relationship stronger. Okay, especially using these for your employees, right? As a company, you should know what your employees, right? As if you're the owner, you should know a little detail about your employees. You don't want them to just work for you and not know anything about them, right? Yeah, so it is definitely to keep track of additional information. All right. I'm gonna say that can be used for conversation starters or to build relationships. Okay? Because if you're not intending to build a relationship, then why would you need to collect any of that information from any of your people? Okay? So the intent here is to build a relationship. Okay? So why would you need to know if that person has a dog or not? If you're not even intending to build a relationship or wanting to know any information like that. Okay. Now let's talk about what are the rules? How many custom fields can you have in total?
7.
Okay,
Is it 15?
it is 15, correct. Oops. You can have up to a total of 15 custom fields. However, when you're looking at a person, right? Okay, so if it's people, then that's where 7 can apply.
That's what confuses me.
No worries.
And 7.
You have to know that because people is 7 custom fields, right? And I believe your book also says items. You can have up to 5 custom fields there for items, but it's not the same way. Okay. So here, right, out of the 15, you can use one custom field for multiple people. So if you guys remember that window, right? I'll go ahead and show you now so you can take a look at it. So I'm going to close. Yes. Okay, so let's go to my customers. And I'm going to go ahead and just double click on a random person. So if I go to additional information, right? Here, I've built so many custom fields, right? If I click define fields, the question is, I have all of these set. I can apply them to one custom field can apply to both a customer or a vendor and all 3 employees. You could do one for all of them. So spouse's name should be universal for everybody, right? Especially for your customer, right? especially for your employees. You definitely want to make sure that you know that your employees have families. And for a vendor, that could help you build a stronger relationship with your vendor, of course, saying, oh, hey, how's your wife? So, spouse's name could be a custom field that you can use for both, for all three. However, each person, right, so all your customers can only have a total of 7. Now, you can't customize it per person basis. It's just the general group of people. So in this case, for your customers, you can only select 7 out of the 15 that work for that particular customer. Now, again, that particular customer, you may not need to use that field. What if you don't get their pet? What if they don't have a pet? What if they don't have a spouse? Then those fields you can leave blank. But that's what I'm trying to say is that for each individual, you can only have up to 7 custom fields. All right? And it's or for your vendors, you can only have up to 7 out of the 15. And once again, one custom field can be used for multiple people. Okay, that's what it looks like. All right. So how? I already showed you how. You would go to customer / vendor / employee setup, more info. Oh, sorry, actually, customer, vendor, or employee profile is a better word. Okay, you're gonna go there, edit, and then go to additional information. And then you will have define fields. Good. All right. Is this the last question? Yes, it is. Last but not least, how to customize an invoice.
Go to company on the menu bar and preferences.
No. So this is like, okay, so this is saying like when I want to send an invoice to my customer, right? How do I make it pretty? Or in this case, make it tailored to my company? How do I modify my form so that it looks like it actually comes from my company than from any company?
Custom fields.
Not custom
Or
fields.
template.
Okay, you go to
Template.
Template.
What was that, Nathan?
No, I went different direction, I guess.
Okay. Okay, so where would you find that templates? Where would I find a list of all my templates?
It's on the list, right?
Correct. List, and you're gonna find all your templates here. So this is where you get a list of all of the sales forms, all the invoices, all the sales forms, okay? All your purchase orders. And what you could do is you can either click on them and customize them so that are tailored to your company. Correct. You could change the colors, you could change the font, you could add your company logo. There's a lot that you can do. Now you can also create one from scratch by going down here and clicking new. But once again, you may miss a lot of details when it comes into creating a brand new template. So they do recommend you to just take one standard one that is already available and just customize it from there. Okay, so here we have it, how to customize customize invoices. You're going to go to list.
Very in character. This is amazing. I love it.
Dan,
Sorry.
all right, list, menu bar, templates, and you would just click on or create a new template, and you can customize colors, fonts, add company logo. Oops. Okay. So, yay, that is it. All right. Any extra questions in regards to the certification test prep questions?